to the company also. About the company profile, it's an Ecuadorian ice cream factory which has the brand Topsy, and it belongs to the Tony Corporation, which has another 4 companies. It's a public limited company. It was founded 25 years ago, and their main products are made of water and also cream. In the problem statement, we have that Evadosa needs a financial plan that ensures the company's financial capacity to support future investments that may be freezers because the company needs to improve its sales. Also, this plan has included internal and also external factors that may affect the normal development of the project. In the proposal specification, the current financial plan that they handle does not fulfill the company's requirements because it does not consider variables like market development, cost variations, or regulation changes. So it's not really effective. And the effect of marketing campaigns on sales has to be measured and compared to know how are going to be the incomes of the company according to different years. In the problem context, there was an implementation of a marketing campaign in 2010, and this caused a boost in the company's sales. As we can see in this chart, the sales in 2010 are really different from 2012 because they are almost 50% of difference. So, to explain a little more about the problem, the company's objective is to increase sales. For this, they are going to do annual investment in freezers so that they can have more distribution around the country. And the amount will be done according to the annual projected cash flow of the company. Because with this, we know how much money we have in the company. And at least we are going to project it in 5 years, because that's how we know how it's going to be the future. In the proposing future, detailed information about the future financial state of the company will be available for managers. The company will be able to face annual investments in freezers. Also, the company will have a projected cash flow with data about incomes, costs, and expenses of the company and every department. Also, managers will handle more accurate indicators because of the more real data they have. In the proposal description, we have a process. First, we are going to do the measurement of the marketing campaign's impact on the company's sales. Then, the structure of the cash flow using the direct method, because it's the one that the company currently uses. And then analysis and projection of incomes, expenses, and costs of every department. And then an analysis of current debts the company has. Then with all this information, we are able to determine the amount of freezers. And we are going to do an analysis of how much each freezer has in. And after decision making about raising funds for investments, and also we're going to value the project. In the action plan, we have general objective and specific objectives. The general objective is to determine the company's financial capacity to support annual investment in freezers. And specific objectives are to analyze the company's revenue from the efficiency of advertising campaigns. Then we're going to determine incomes, costs, and expenses for each department. And then analyze funding strategies according to the projected annual cash flow. Doing all of this, we're going to have these outcomes that we're going to have a real cash flow projection considering external factors that might affect the project. Also, the sales department will be able to handle more freezers, decreasing the amount of complaints received from wholesale customers because they are constantly demanding for more freezers that are new because they're always damaging the old ones. And also better performance indicators in the sales, marketing, finance, and production department. Better utilization of the factory because according to the current indicators that we have, we're using the factory only at 15% of its capacity. In the evaluation, we have 3 parameters. The two first ones are together, and the other one is for the investors. And the first is called internal rate of return, and the second one is net present value. With this net present value, we're going to see how profitable the project is. And the internal rate of return, it's the amount of money we are going to get from this project. And this value has to be higher than the capital cost, because that's how investors know if the company is increasing its value in the market. And parameters, the final amount of money the company has to manage at the end of every year has not to be below $300,000. And as I said before, the indicator must be higher than the capital cost. In the follow-up process, cash flow projection has to be checked periodically because of the changes of the market or cost that may appear in the time. And also have to ensure credit and collection department performs its activities on time, because incomes of the company depend on this department. And in the schedule, the project will be developed in 9 months, starting in October, finishing in June next year. Here are the steps that I mentioned before in the process of the proposal, finishing in project presentation to managers, it's going to be in June. And the budget, there is only mobilization from company to university and university's house and salary, because the company pays for transport to house to company and company house, and also daily lunch. And the references, I took 3 books and also a web page that also helps to calculate the indicators and everything.
Do you think your proposal is going to be implemented?
Yeah, of course, because I have all the support of the financial manager, which is encouraging me to start with this project.
What are the main resources that you need to implement your plan?
The main resources. First, I need help from the company, because I need a lot of data, a lot of information that maybe they're not willing to give me because of, well, you know, I'm an external person right now, but I think with help from my boss, or the person that's going to be my boss, I think they're going to be able to give it to me. So that's the resources and the information.
You will work directly with the financial manager?
Yeah, with the financial manager.
Why did you say that you were going to check time periodically? Why is time important?
Because money is not the same value today than 5 years. So I have to manage well these amounts, because it's not the same market today than tomorrow. So I have to check time.